Thank you for joining me on Project Tech Accounting YouTube channel. Today we're going to talk about the accounting process, which is the flow of accounting data from journal to the ledger. The accounting process refers to the systematic way accounting or financial transactions are recorded, classified, summarized, and reported in any accounting system, whether it is manual, which is paper-based, or computerized accounting like Sage 50, QuickBook, SAP, Soho, or even Tally, depending on the software you are using. So today we're going to go through this process, and it's going to be an introduction to the Sage 50 software that we are going to treat in this uh, channel. So, having defined what the accounting process is, we are going to talk about the different stages in the process. One, when a transaction occurs, that transaction is recorded on the source document. That is the first thing that occurs. And I tell you, that is the beginning of accounting. Once a transaction occurs and that transaction is recorded, that is the beginning of financial accounting in any establishment. Now, the second thing that happens is that you identify the accounts that are being affected. The number three, you determine whether the account increases or decreases using the rules of 6 main accounting type. Number four, you record the transaction in chronological order in the journal or in the input screen of the accounting software. Then ensuring that you list the debit first and also making sure that debit equals credit. Number five, you post all transactions in the ledger. You post all transactions to the ledger in the T account. Journal entries are transferred to their respective um, ledger account. That is what we mean. When you are doing uh, you are posting, first of all, you may need to generalize your transactions before you finally post them. And finally, you generate statements. These are the processes you will take in the software when your transaction occur and when you generate your statement. And I want to let you know that the software Sage 50 generates this statement automatically. So all you need to know is that you will know how to uh, identify your accounts that are affected, determine whether they increase or increase by recognizing the debit account and the credit account and posting it on the journal. Then the software does the accounting and generate the statement for you. So going forward, I'm going to make some important definitions which is going to guide us in the Sage 50 accounting process. Number one is business transaction. A business transaction represents activities that occur in the business and they are being represented in the journal. Journals are chronological records of all the business activities that are organized by date. They are being organized by date. That's very important. And what's an account? Account represent a particular type of asset, liability, or equity. They represent a particular business activity. For example, sales account, expenses account. These are business activities. In accounting, a business activity represents is being represented as an account. So when you transact a business, that business you transact is being represented in the chart of accounts as your account. So you're going to use that account to do your posting. The information in journals are being posted to the general ledger where the information is organized by account. A ledger is a book of T accounts in which a page is a detailed record of an account. Example, we have the account payable, we have the account receivable, we also have the cash account. These are all known as the ledger. A trial balance is an internal document where these T accounts are represented and double checked to ensure that the debit equals credit. The company now will now use the T account trial balance information to do official set of financial statement. This is the general accounting process. In computerized systems like Sage 50, the trial balance can be generated instantly. And what is a T account? A T account is a simple virtual tool used in accounting to represent a ledger account, and it shows the effect of transactions on that account. It is called a T account because it is drawn in the shape of the letter T. T account is used to visualize double entry accounting. Every transaction affects at least two accounts, one debit and one credit. So it also make it easy to trace balances before transferring to the trial balance. It is also very useful in teaching and manual accounting before using the software. So going forward, I want to also talk about the balance sheet. A balance sheet represents the financial photograph of a company's financial position as at a particular date. The balance sheet is broadly classified into three main sections: the assets, the liability, and the equity. Assets are what a company owns. Asset is classified into different subsections. We have the current asset, which is cash or any item that can be converted to cash within 1 year. We also have long-term assets, which are items that may not be converted to cash within 1 year. We have, for example, your property, plant and equipment, building, land, furniture, and computer systems. We also have the intangible assets, which is, for example, the goodwill, trademark, patent, or even recommendation. These are intangible assets that you cannot see. Liabilities. Liabilities are what a company owes. It is classified into different subsections. The current liability, example, current accounts payable, wages payable, and salary payable. These are um, liabilities that are unpaid. We also have the long-time liabilities, example, the car loan. And finally, we have equity. Equity represents the company's profit, which is known as the retained earning.